Hello, I'm delighted to be joined today by Ciara O'Leary, who is a partner at Deckert's specialist ETF practice based in Ireland. Ciara, you're very welcome, and today we're going to be here to talk about some hot regulatory topics that will be of interest to asset managers and ETF issuers in the European ETF market. Ciara, you're very welcome.
Thanks, Paul. Nice to be here.
So we're going to pick on some themes here today. The Eligible Assets Directive is an interesting one, not just an ETF directive, it's for the broader UCITS market. The ESMA recently issued a consultation process on the Eligible Assets Directive. Can you give us your views on that, please?
Sure. I mean, the Eligible Assets Directive review is probably one of the most significant reviews and overhauls of the UCITS regime since 2007. So obviously it's a key focus for asset managers and the regulators and the overall kind of investment management community. What the Eligible Assets Directive is seeking to do is really look at what assets UCITS have exposure to and whether those assets are appropriate for UCITS. And I suppose it's important to remember that ETFs within Europe are structured as UCITS. So if they're appropriate for UCITS, are they appropriate for ETFs? The aim of the Eligible Assets Directive really is to kind of, I suppose, smoothen different regulatory interpretations around specific asset classes within Europe to remove any sort of perceived regulatory arbitrage, and I suppose also to try to look at the evolving asset management community and the asset classes people are seeking exposure to. It's obviously a very fast-paced industry, and assets that we hadn't even, thought of when 2007 were out now were things that people are looking at and focused on. So the regulators are just trying to keep up with the pace of the inventiveness and ingenuity of the investment management community and seeing whether those assets are appropriate for UCITS or not. I think it's probably tricky to say which way it's ultimately going to go because the consultation has been very broad and very open, really just listed a number of asset classes and asked for people's views on it. So I don't think we'd like to be definitive about which way the regulators are going to come out, other than I think it's important to remember, as I said at the start, it is about having a consistency of approach in respect of assets. And that obviously is something that is useful for anyone within the asset management community seeking to kind of establish a product launching.
And timelines, the initial call for responses to the consultation process finished in August 2024. Any idea on timelines when we can expect any kind of second stage or indeed any outcomes?
Tricky to say, Paul. I think there's a lot of feedback on it, and you obviously have a lot of interested parties, both asset managers reviewing it, you have the European Commission, you have politics coming into play about what is eligible or not, and various different lobbying groups. So I think it will be interesting when we see the initial replies to the consultation paper when they are published, and you're probably likely to get a better feeling and thinking of where ESMA is going to go on things when you see those replies.
Okay, thank you. Changing the topic to the topic of ETF transparency, a hot topic in the US, it's a topic here in Europe. With the regulatory prism, what are you seeing when it comes to ETF transparency from regulators?
Yeah, that's always a continuing topic, and particularly when you're seeing the growth of the active ETF manager now. I mean, I think it's fair to say that a number of years ago when active managers were starting to consider ETFs, they were very concerned about the transparency requirements that certain jurisdictions had. I would say I think it's important to note that appears to be less of a concern as we've gone over time, but the fact that certain jurisdictions within Europe are looking to move or change those rules around transparency, again, kind of linking back to the Eligible Assets Directive, is kind of, I suppose, outside the intention or the aim of the UCITS products in general, which is to have consistency of approach throughout Europe. So we're certainly seeing that the views within the regulators are evolving, that they maybe overstated to say that they don't believe in transparency anymore, but that they feel that products can still have good transparency, provide good information to investors, but without necessarily having to kind of give that level of administrative burden on managers around meeting transparency requirements. So I think we will see some movement on it. I think we will again see that type of smoothing out of positions within Europe, and I think it's probably one less thing that people will have to consider in the future.
Okay, and then to another topic on a number of regulators in the last couple of years have issued what we call themed inspections on ETFs. Can you talk to us about what we've seen in those themed inspections and what have they been looking at?
Sure. I mean, the themed inspections really have been focused on, I suppose, the kind of ecosystem of an ETF and how it actually works and operates in practice. Because whilst ETFs are structured as UCITS, as you and I both know, they have a different kind of operating model outside of a traditional mutual fund. So where the focus really has been in the themed inspections is looking at the primary market interaction with the secondary market, the role of the APs, the role of the market maker, but I think very importantly, the role of the management company in relation to managing those two levels of market participation. Because it's, obviously a significant difference between the way an ETF runs and a standard fund, for want of a better word. So that's really been where the regulator has been looking at.
Yeah, and we've seen that more broadly, not just in ETFs, but the regulatory focus on management companies. When it comes to ETFs, what do you think of the implications for that may happen for management companies as a result of regulators coming out with different views as to what should be happening?
I think where you're going to see is an expectation from the regulators that people within management companies have sufficient, I suppose, knowledge and expertise in respect of specific types of fund structures and asset classes. So looking at who inside the management company is, I suppose, for want of a better word, dealing with the ETFs that they're the management company for, and how they know how the capital market system interacts, how the primary market works, how the secondary market works, and how the management company is able to meet its regulatory obligations in respect to the supervision of those two markets to ensure adequate protection for the overall investors.
Thanks very much for your insights, Ciara. As always, European regulation is constantly evolving. ETFs are part of that evolution, and I'm sure plenty more to come. Thank you for your insights, Ciara.
You're very welcome, Paul.